I'll show you how we caught the highs and lows yesterday. All right, we're in a symmetrical wedge, really a flat market right now. We've been in basically a downtrend since around 3 a.m. this morning. You see our longer-term moving average has been down. Look how flat we are right here. When you first log in the trading room, you really want to look at this MA, this magenta MA. That's a longer-term MA. Moving averages to me are worthless, okay? But you use them for not support and resistance in general, but as trend direction. And you want to sell the high of the profile and the low of the profile in the first test. And that's what we did yesterday. Let me show you why we're waiting for a trade setup. And I'm going to show you how we did this yesterday so you understand how we do this. Yesterday, I said we look to buy the low of market profile because of the moving averages. We're going to do the same thing this morning. Let me show you how we do this. All right. These are number one trades, how we caught the high and the low, my profile levels, almost to the exact tick yesterday. We've been doing this ever since we opened up the trading room. This exact setup has been working for 30 plus years on market profile. It's called my number one trade. There's only 2 setups you learn in the trade room. What are you going to do when you first log in? Very simple. Okay. You're going to look at these moving averages. Now, if you look on our website, www.daytradingthefutures.com, we have what's called a shark bite trade. And a shark bite trade is very simple. I came out with this in the late 1990s when I used to trade high blocks of stocks as a small order execution trader, a SOS trader. It works today in the Forex and also in the futures markets. It's a really neat technique. I got a smaller moving average and I got a larger term moving average. The best way to trade, okay, profile off the black charts is this. We have what's called a number one trade. We're trying to get a deep retracement with overall trend direction. When you see moving averages get out of alignment, and you see a big spread like this, let me blow this up a little more so you see a little bit better. You can see the moving averages get out of alignment right here. Look at that spread between the moving averages. When you see that, we don't sell high value area. We're not counter trend traders, okay? We let market profile, if we're going to counter trend trade, we let market profile get us in when it breaks back inside of HVA or LVA. Other than that, we only buy LVA in the pullback if we're in an uptrend, and we sell HVA in a pullback if we're in a downtrend. When you see spread between the moving averages like this, okay, they get out of alignment. You see this one going up. You see this trying to hook over here a little bit. You get a big spread between the MAs. Almost looks like a big, shark opening its mouth right there. Real big spread. This MA gets out of alignment, going straight up. When you see that, you want to buy the first dip to market profile, the first outer edge market profile. So this is when it comes within 2 ticks, use a pull-in bar on our Simrenko bar. It's got to pull itself above a doji or spinning top. So the moving averages, that's the first thing you want to look at when you trade these black charts, is buy the first pullback to LVA on the volume or price profile, whichever comes first. When it comes within 2 ticks, you got to make sure you pull yourself on the Renko bar. Then we came all the way up. So this is one I called out before it happened. I called this at 8:20. It happened at about almost 8:45. I called this exact level to buy way before it happened. Then we come up to this level profile. Well, this profile already tested once up here, so we don't want to take the profiles that they test more than once or twice. We want to take the profiles that haven't tested at all. This profile never tested at all. Okay? Never even tested. So this is 87. 87 yesterday, ladder, you're exactly right. When you're on your comment, is that a short? It sure is. Look at the moving averages, how the spread, you got spread, they got to have alignment again. So the first outer edge profile called the high again. So that's called my number one trade. It's very simple how to trade the black charts. You buy the first test of LVA and a pullback within 2 ticks, maximum 3 with a pull-in bar off the Renko bar, or you sell the first test of HVA off of the pull-in bar when it comes within 2 ticks of HVA, high value area red. Now we have what's called another trade, a number 3 trade. A number 3 trade is very simple. You don't buy LV in a downtrend, right, with moving averages. You let it buy and you let it retest. So when it breaks down and it retests within 2, maximum 3 ticks, you do a pull-in bar also. So when you break LVA in a downtrend, then we're just going to buy and retest what's called a number 3 right here. And that was a great trade on number 3. This also, J signal came out and gave me a J signal short right here. It broke below LVA on J signal market profile and gave me a beautiful short. That was a real beautiful trade on J signal right here also on your own charts. So there's only two setups you need to learn in the trading room, a number one and number three. A number one is a deep pullback with overall trend direction. Deep pullback comes within 2, maximum 3 ticks, get a pull-in bar. It's exactly how we do it. It's got to be the first test. You avoid multiple test areas when you come up. This tested earlier. You only go for first test, called the exact high on this one also. Then if it's in a downtrend and it comes down to LVA, you don't buy LVA. You let it break down and you let it retest LVA. And that's your continuation trade. And this is where J signal came out also. Okay? So if we go in today's conditions or today's environment, let's take a look at the outer edges, what we're looking at. Now what we got here is I had a beautiful setup here where the moving averages got out of a place at 445 this morning. This is a typical shark bite trade. I want to sell HVA right here. Look at this beautiful spread. That's what you want. It just never made it, right? Like it did yesterday. It never made it. If it would have got up here 2 times confluence, see this dashed line? Let's call my hedge. And then here's my HVA. In a heartbeat, without even thinking about it, that would have been a short. It probably would have been a 100 ticker, if not a 150 ticker. All right? So never made it there, but that's the type of alignment you want. You got moving average. Look at that big shark bite. Look at the big wide mouth. You get that little hook right there. That's the type of trades you want to sell that high. Never made it. So we haven't made it to the outer edge profiles yet today. So that suggests to me that since we have more of a, look at the magenta MAs. They're pretty much flat right now, right? They're sandwiched. So I can sell the high and buy the low in the first test. So my number one trades are going to be in the outer edges here this morning. I'm going to look for a short here. If it comes down first, I'll look for a buy here because they're flat as a pancake. You're allowed to buy the first test of LVA or HVA if trend is flat. If trend was just strictly down, I'd only sell it HVA. If trend was strictly up, I'd only buy LVA. But you can tell it's really easy off these black charts to understand what you do. Really, really simple. Because what we're going to do is we're just going to sell the first test of, or buy the first test of LVA. That's how accurate my charts are. Or sell the first test of HVA if it's in a downtrend. And let that spread dictate. When you see spread, when you see that smaller moving average get out of alignment and you see big spread between them, or blow it up, you'll see it more pronounced. You look at that spread between the MAs. There's, look at it, almost stopped to the exact tick. That's how accurate market profile is. The same set's worked for 30 plus years, guys. Look at this, almost stopped to the exact tick. And these profiles, you don't get a lot of them during the day. You don't get a lot. But just remember, if you're in a downtrend here, you saw the first test of HVA. And then you don't buy LVA down here. We're smarter than that. We're more knowledgeable than that. I don't care what market profile book you read. I don't care what you order from Amazon, what you pick up from Barnes & Noble. They're wrong. You don't buy LVA in a downtrend. That's how you get beat up. You're not going to be successful if you keep buying LVA in a downtrend. You're going to see a lot of trades get stopped out. We're smarter than that. I'm more knowledgeable than that. I'm teaching you the correct way to trade market profile. You want to let LVA break and let it retest. Look how it retests almost to the exact tick. Look how accurate that is, my trade setup. These setups, guys and gals, have been working for 30 plus years. We'll let it break down below LVA. Then we look for the retest. And this is how we do J signal too. Let it break down and look for the ABC short. And this consequently, like I said, was J signal short. It was a perfect 5 Simrenko short. It was gorgeous. It caught the exact high, and I'll show you in a second. Now look at this. Look at that ABC short, right? That's just a gorgeous ABC short that we got going on. So when you do these, you buy the first test of LVA or HVA with trend direction, right? With overall trend direction. And then you look for the continuation. Now what will happen, my J signal, it'll line up exactly when my number 3 lines up on my market profile, my black charts. Check this out. Look how beautiful this is. Is this gorgeous or what? Now look. Here was the breakdown of 20. Here's profile right here, right? Here's my profile, my black charts. Look how gorgeous this is. Is this pretty or what? There is the profile on J signal. The number 3s on my black charts line up a lot with J signal. I mean a lot. If you see this, it's really good confluence. It broke down here, came up, and gave a J signal short for the continuation on a continuation pattern. So you'll see that a lot where they'll line up together. They'll line up together. You don't need them to line up together. You trade the black charts all by itself and J signal all by itself, but the threes line up together. Your number ones will never line up with J signal, almost never, because we're trying to catch the exact high or low on the number ones. So when I look at this, and I'm going to show you what we're going to try to do today. When I look at this, the J signal will always be opposite on these number ones because we're trying to catch the exact swing low or swing high on a move. Now, when you do a number one or a number three on the black charts, you don't risk more than 15 ticks. My profiles are so accurate, I'm not risking more than $150 per one contract. I won't do it. Nobody needs to do it. If you risk more than $150, you're trading the system wrong, because you should not risk more than 150 bucks on my black charts on a number one, number three. We should come within 2 or 3 ticks, and it should hold 15 ticks. We should come down to LVA and get a pulling bar, and we should hold 15 ticks. We should break below LVA in a downtrend, retest LVA, and we should hold 15 ticks, maximum stop. Okay? But that's how we do it. When you first log in, I can't reiterate this enough, check out your MAs. Whoever trades off MAs to buy and sell, they're not very competent traders, because you can't do it. You don't know if it's going to stop at the 50, at the 200, at the 34, at the 20. There's thousands of programs out there that use MAs. They're worthless. They're just junk, because MAs are worthless. They're lagging. You can only trade order flow, market profile. Thank you, Peter Stoudemire, for coming out with it in 1985, volume in 1994. Thank you. You ever see Peter Stoudemire? I talked to his right-hand man, Steve, who programs all his software. Thank him. You ever talk to him? Say thank you. Because it's the most accurate system that's ever came out that I've ever seen. And I've seen thousands and thousands of indicators that say they're the holy grail. Nothing, in my opinion, beats market profile. Look at this. Where can you go and stop to the almost the exact tick? Exact. Where can you go to get that stuff? Peter came out with market profile, and it's working today after 30 plus years. I just put it in my own methodology on how to trade it. A lot of traders trade it. They think you got to buy LVA because it's low value area. No, you don't. You sell it because it says HVA. No, you don't. It's all a trend direction. If moving averages are up, I buy the first test of LVA. If moving averages are down, I sell the first test of HVA. If moving averages are down, I don't buy LVA. I can only sell HVA. I let it break, let it retest for continuation. Okay? So that's how we trade the black charts. Don't make it any more difficult than that. And it has to be a first test basis. Okay? Now today, Gerald, go ahead and shut that off.